Welcome back to the channel. On today's episode, we will be looking at two giants in the same industry of the same equal market cap, serving the same market. These two giants, they actually did well for humanity. They gave us the COVID-19 vaccine. It's either you have taken A or you have taken B on the vaccine. And I'm talking about Johnson & Johnson and Pfizer. These two companies, we will look at their PE ratio, we will look at their balance sheet, we will look at their finances to see their balance sheet. We would see where their prices are. We will measure the two of them to see which one is good for your portfolio, my portfolio, our portfolio, or which of them as an investor that you will get a better return. They are both paying dividend. It's fine. However, as an investor, it is more important that you get a good return. Let's see which of them has a lot more upside to come. In comparing the two stocks, we will look critically at their PE ratio. Does the PE ratio really matters? There's much that has been said about PE ratio. On this channel, we often talk more about ratio of total liability to free cash flow. Does it really matter? Who does evaluation? What is valuation? How does valuation work? Look, valuation often depends on who is doing it. The bias, there is always the bias in valuation. Look, let's have a look at where you don't get a bias, except you are biased yourself. Let's have a look at a technical chart. Let's see what the price action will tell us about the two stocks. We are looking at Pfizer on Yahoo Finance. Guys, the previous close is $50.60. Here, $50.78. The market cap for Pfizer is $285 billion. 022. Then the PE ratio is 13.18. Pfizer is paying dividend. You can see that. For this exercise, we're going to go to the financials. On the financials, can we quickly start with the income statement? We just breeze through this because of time. 2018, you can see 53 billion, over 53 billion. 2019, there's a drop there. If you drill down, you will see maybe acquisition, maybe, the cost of revenue, as you can see, it is almost the same there too. Now, 2020, in fact, there's further drop of about 10 billion. We need to know why. Within 2020, you can tell for COVID-19 lockdown and all that, they were in process of producing the vaccine. So they must have been investing on research and development and all that. I'm not making case for them. 2021, you can see the difference. 2021, they had over 30 billion over that of 2020. You can see. So this could be as a result of them producing the vaccine, and the vaccine well acceptable. Now, can we go to the balance sheet? For this exercise, we need their liability, their total liability. Guys, check 2018, their total liability is 95 billion, 104 billion in 2019. So they must have paid part of their liability, their debt and all that. Here is 90 billion. It has reduced. Now, we go to the cash flow statement. This is very key. Companies hold debt, yeah, it's normal, but you need their cash flow. Now you can see from 13 billion reduced to 9 billion, almost 10 billion here. We would say due to maybe during the COVID-19, why the production was on and all that. But 2021, you can see there's bigger difference here. So they have 11.6 billion free cash flow. Now, can we go on to Johnson & Johnson? I have Johnson & Johnson here already. Johnson & Johnson, the price is 167, almost 3 times of Pfizer and more. And you can see the market cap here is 441 billion, bigger than Pfizer. Yeah, bigger than Pfizer. The P ratio is 21, obviously bigger than
higher than Pfizer as well. They also pay dividend. Let's quickly dive into their financials, guys. Total revenue. Let's start with the same with Pfizer. 2018, you have 81. 2019, you have 82. It's growing. 2020, well, there's no big significant. There's no big significant difference. But 2021 ended. You can see this is over 12 billion difference. It could be as a result of them producing vaccine, COVID-19 vaccine, and well acceptable to all. So you can see it is significant. But if you want to drill down, you can also drill down cost of revenue. See as the cost of revenue was also growing, you know. So let's go to the balance sheet. We need their liability. We need to know if they are acquiring excessive debt or not. Now, the total liability there is 111 billion. You can see from here 93, 98, 2019 here is higher. Obviously, they may have incurred debt again because of the production of the vaccine. I'm not making the case for them. Let's look at their cash flow. This is key. This is very, very important. Very, very important. Now, 2018 or 2019, you can see it's 18 billion here, 19 billion, and here they have 20 billion in the free cash flow. This is the amount they can do anything, absolutely anything, investment and all that with. So now what we're going to do is go onto the Excel sheet. I've copied the this information with their um, P ratio. I've copied all on the Excel sheet. For this exercise, I have copied those informations here. This is the P ratio for Pfizer. This is the P ratio for Johnson and Johnson. This is market cap for Johnson and Johnson. This is market cap for Pfizer. So you can see. Oh, sorry. There's a mixed match here. The this is for PFE Pfizer, and this is for Johnson and Johnson. Sorry about that, guys. Sorry about that. Let me quickly save this. Yeah. So this is for Johnson and Johnson. This is for Pfizer. Now you can see for Johnson and Johnson, you have their total liability as 111 billion. Their free cash flow is 20 billion. What it means is that as the company as it is, if they were asked to pay their total liability, to pay their debt, how long will it take them? How many years will it take them? For Johnson and Johnson, it shows that it will only take them 5 years, maybe 5.5 years. For Pfizer, it will take them 11 years, 11 and a half years based on the debt they have. So it means that Pfizer is more in debt than Johnson and Johnson. It is simple. This is total liability to free cash flow. We are looking at Johnson and Johnson. Johnson and Johnson on a weekly chart. Guys, immediately I see this, what I can do, let's start with this. There's a support here, which is holding on a weekly chart. However, you need to see the trending line. This has been consistent. Consistent. This is an upward trending stock. This stock is bullish. It's a bullish trend. Yes, it's a bullish trend. On the weekly, it's currently on a support here. What we expect is to bounce back from here and to start going back up. Otherwise, if you break this support, the next level we're looking at should be around 146. It should be around 146, somewhere here. Okay, there's another one before that, and it's here. Yes, that will be around 155. Guys, let's quickly look at the daily chart. For the daily chart, immediately I can see a support. The same support that is holding is it's also visible on the daily chart. And what is even significant here is that on a daily chart, it actually sitting on a 20-day moving average. This is an upward trend. This is a bullish signal. The 50-day moving average is higher on that of the 200. So this is a bullish signal. Now, in fact, it is sitting on a 20-day moving average here, serving as a support for this um, for, um, for this stock. Now, next week when the market open, is either we have it come back and we got it support, or it's going back up. Um, Johnson and Johnson is the value stock. It, it is the value stock. If you have the opportunity to have gotten it when it was 155 or one, yeah, I mean, you're blessed. This stock hardly go lower than, let us see, the 52 weeks high is 177. Let's see what is actually that is dropped from the high. We're looking at it on um, a daily chart now. From the high, it is actually just about 3%, guys. Yeah, about 3%. Let's have a look at Pfizer. Pfizer, Pfizer. This is Pfizer. Wow. Pfizer. Did you guys notice that these stocks, their chart almost look similar, alike? Like, let us draw the support line we can see here. This is the chart for Pfizer. In fact, it is below 20-day moving average here, and it's sitting on, guys, let's draw this. So Pfizer has been ranging between here. Oh, not for long. Let me take up this for the moment. Take away this, and I come up with this, guys. Can you see that? Now, it is on a support here. What we expect is to bounce back and break this line here, the trend line here, go up. Otherwise, Pfizer will drop down and hit the 200 moving day average. It's currently below 20 and 50-day moving average. Unlike Johnson and Johnson, Johnson and Johnson is above 200 moving day average. So it is more, Johnson and Johnson is more bullish than Pfizer. As you can see, Pfizer is below 20-day moving average and 50-day moving average. Up, it's on its support currently. Let's look at it on a weekly chart before we jump into conclusion. On a weekly chart, guys, you can see it's also uh, a bullish trend, an upward movement. Yes, it is. It is not as much as that of. It's not as visible as that of um, Johnson and Johnson. Sometimes he breaks out of it and comes back in, but this is serving as support at the 20-day moving average on a weekly. So, guys, they are both on a bullish trend. They are both on a bullish trend. Johnson and Johnson is more bullish than Pfizer. However, what you can see, both of them, they have different um, price. Um, yeah, but let's let's go back to daily chart. On a daily chart, you can see it clearly. It is below 20-day moving average there. So, guys, make your decision. You can see we expect it to, it has touched here, either a break back come on it. upside here, or it breaks down. It breaks it down. If it breaks this support down, guys, we are looking at the next stop around here. We're looking at the next stop down, down. Now, that's not what we want. But for those who want to buy it nearly for value investors, you might be, wishing that it goes. But Pfizer has not always been bullish as Johnson and Johnson.
Guys, we have seen the technical chart. We have seen the metrics. We have checked what we need to check. We have checked the PE ratios and all that. It is up to you. Do your own valuation. Make sure these stocks are good for your portfolio. They are both value stocks. Value stocks often depends, as we say, on who is valuing it. Thank you for watching this channel. Thank you for liking our videos. We will continue to produce content that would support your growth